Alright, what's going on, guys? Welcome back to another video. So I'm going to be going over how you could have traded to the weekly imbalance today. I ended up shorting to the weekly unfilled and I ended up banking today. So just to start things off, again, if you ended up getting stopped out today or break even, I'm going to go over the stuff, how you could have taken an advantage of this trading opportunity for the day. I want to go over just the way I read the market and just the pros and cons of what I did today and what you probably did as well and how you can take advantage of stuff like this. So let's go over this. So let's go over to 9:30 open. So coming into the open, as you can see here, we ended up opening higher, right? Again, if you look at the overall just higher time frame picture, again, let's go on the weekly real quick. So as you can see, the overall draw on liquidity is to this weekly unfilled, okay? Weekly imbalance. And then if you look at price action here on the daily, we do have two PD arrays that could deliver us lower. We have this daily unfilled right above us and this daily volume imbalance. Which one do you think we're going to deliver from? Now, if we're really bearish, again, you got to look at the weekly opening price here. We come into the weekly opening price and trade into this volume imbalance. That's what I wanted to see. So I marked that out. And as you can see, let's look at Tuesday, or the Tuesday open, Monday, 6 p.m. If you look at what we did here, we came and traded higher into this and then displaced lower, giving us this 1 hour IFEG as well as this 1 hour bearish breaker. Now, if you go on the 4 hour here for analysis, again, you can see we have this 4 hour sweep of this high to this 4 hour sweep of this low. Okay, now, whenever you're looking at price here, we have this 4 hours here to the high to the 4 hours here to the low. Again, I've seen this work so many times. Candle closures is something that I'm going to implement in my trading from now on. If I don't get a candle closure on the higher time frame, or if it's not a clear V-shaped recovery or a clear V-shaped IFEG entry or a clear candle close with displacement, I'm not going to take the trade. Okay, because I've realized that from now on, the best trades come from candle closures on the higher time frame. Either we get a 1 hour sweep and it closes back in the range, or a 4 hour sweep, 15-minute sweep. There has to be some sort of CRT, which is candle range theory, which the way I see it is if we sweep this internal high. So for example, this is 2 p.m. We go to the next 4 hour candle. If we want to trade to this 4 hour low, we got to sweep this 4 hour high inside of a key PD array instead of a key time, right? So 6 p.m. is opening higher, tapping into this volume imbalance above the weekly opening price. Now we're displacing lower. If you look at it, where are we displacing lower to? So as you can see, let's mark out time. We open higher. So we open higher here. We create this internal structure and then we go lower. The way I like to see this is I want to see price action displace through this, closing below 6 p.m. and then there's your flush lower. So now you know we are forming, the reversal has formed. Now you can catch continuations, and that is how I like to trade. I always want to trade the continuation of the trend, right? So once we get confirmation, what do I look for? Continuation. So as you can see, I want to see price open higher into this gap, aligning time and price. As you can see, we have 10 p.m. open and then 11 p.m. 11 p.m. is opening higher, tapping into this, mitigating time. So I don't need to see equilibrium here. Why? Because we have time and price aligned. Plus another reason being is because we do have lower time frame structure as well here. We have this 15-minute from this internal to the low. We have this potential continuation model. As we can see, you never really take first tap essentially. You could take first tap, but it just depends on structure. Me personally, I don't take first tap unless like time is aligning perfectly. So for example, if this 10 p.m. candle closed on the 15-minute and then the next 15-minute candle came in, swept this next 15-minute candle right away and then gave me an IFEG, I would take it. But after us consolidating for like, again, 45 minutes and then it taps, it's most likely not going to deliver because we're about to open up the new hourly candle, this hourly for value gap. So I expect 11 p.m. to open higher into this, and this is where I end up looking for a short. So now that we have this open high, right, if you look at 11 p.m., 11 opens higher, sweeping this high, tapping into this range, and now what do we have here? This 5-minute IFEG. This looks pretty clear. Again, if you want to wait for one more candle, as you can see, we have this short here. 11:45. Stop at the body high, because in this occasion, again, it depends on where. Usually you want your stop loss at the high, right? In this occasion, since I'm so bearish, it looks very clear. Okay, this will be my break even, and I would expect price to deliver lower to all these lows down here, right? Now, let's look at time and price. As you can see, this next 12 a.m. candle opens lower with a devil's mark high. So immediately, instead of holding it, I immediately just hold here, because now I see that midnight open is most likely going to get mitigated, and that is where my break even is. So it's most likely going to mitigate my break even. So I'm just going to go for low hanging fruit. And as you can see, we target low hanging fruit. And then what does price do? Go above time again. Okay, now using the same analysis, I'm going to go into today. Right, we're clearly still bearish. 6 p.m. opening price is still holding strong. As you can see, we come up, mitigate 6 p.m. holding this bearish PD rate in a premium of the range. And now we're going lower. Now, if we're truly bearish, we should hold any PD rate that's in a premium of the range to then go lower. So now, same thing coming into today. 9:30 open is opening higher. Okay, what is my first mistake on the day? So again, I'm gonna be honest. I saw this 9:30 open. I was like, I got a little too excited, and I was like, oh my god, this is so clean. I'm gonna short right away. I'm gonna front run this. No, that was wrong. I should have waited for displacement if I was gonna run this. You know, I should have waited for confirmation. I'm trying to grab this reversal right here without any structure. Yes, we are mitigating this higher time frame 1 hour. We are mitigating the midnight opening price, as you can see right over here. This is going to pop up in a second. As you can see, that is midnight opening price. Yes, we are mitigating these things, but this is not ready yet. There's no protected high. There's no nothing. So I end up shorting here. Stopped out. Okay, so now I'm just like, okay, like this is, I was like, okay, like I expected that to happen. Now what do we have? This intermediate term high, as you can see right over here. Where is it? Yeah, right here. The sweep. We have this 15-minute intermediate term high. There's a sweep, and we have a bearish SMT. So at this point, I'm like, okay, now what are we doing? 9:30 is opening higher. We have a bearish SMT. Now we can look for potential short, and this was my second short right here. So I shorted this 1 minute IFEG. Why did I not wait for the 2? Again, you got to understand that you need to use discretion whenever you're trading. The reason why I didn't use this 2 minutes is because it didn't make sense. Again, we have everything we need in order to short. Again, as you can see, we don't have 5-minute CRT at these highs. Why? And in this occasion, I don't need it. Why? I don't need it because we already swept an intermediate term high in a premium of the dealing range. So, and we create a bearish SMT and 9:30 is opening higher. So this whole move is already sponsored. We get uses for value gap to trade into this. Now we have this as our clear break even. So in this occasion, when the draw liquidity is that clear, I'm gonna front run the fair value gap. So I ended up shorting. I went break even around here. Actually, I'm lying. I went break even once we took our previous day low on ES. That's when I went break even. So once I saw this 945 candle open up higher into this order block and then close like this, I went break even. That's where I went break even. At the same time, ES took our previous day low. If I'm being honest, I held, but I should have partialed here. I should have trimmed half off, because at this point, like, I'm already up like 1.5 R. I'm already up like literally 110 points. There's no reason why I shouldn't partial here. I should have partialed some. I didn't. Okay, that's something that I should have learned. Partial the previous day low. But again, drawn liquidity looks so strong, but that's why we take partials, because, well, okay, we secured some. Let's see, the move is not done yet. So at this point in time, what do I have? So now we have SMT. I want you guys to really pay attention. We have SMT with this low down here. If you look at this, we already swept previous day low on NQ. Okay, this got swept, but now on ES, we just swept previous day low on ES, giving us an internal SMT with this low right here. So now we have SMT at this low, and most people are like, okay, well, now 5-minute bullish breaker, sweep a previous day low, less long, 5-minute bullish for value gap, bullish SMT, and they're gonna look for a 30-second long or whatever long they get offered here inside, 15-second IFEG. Okay, long. Some people probably took this. To me, this is a pattern trade. Why is this not a good trade? Because you have a protected high. You do not have, this is not a protected low. The reason why this is not a protected low is because this is not a low inside of a higher time frame gap. Again, it is protected short term, like for now. It's like not even, I wouldn't even say it's protected, because a protected low is more like a low that is created inside of a trending market. This is not a low that is not part of the trend. This is so against the trend. So this is like a short term, like you're gonna get a reaction off of it, but not a reaction where you're gonna hold a trade. You know what I'm saying? Like you have to look at what is the probabilities. And this could have easily failed and gone lower because 930 hasn't been mitigated and we're not delivering off a higher time frame gap. So this doesn't make any sense. So now, obviously, we get this displacement higher. So now what do we want to see? Now we have this low that has SMT, but the drawn liquidity is still lower on ES. So to me, what I want to see, I was like, okay, we just swept the high and we just swept the low. I don't want to get stuck in chops, so I need to see a bearish SMT that is prominent to form so that I can take some shorts. So when we look at ES here, ES ended up at 945, sweeping out the 930 high. And on NQ, you see this is the 930 candle, this is 945. So in order for me to continue shorts, I need to make sure this high is protected. I need to make sure my stop loss is protected before shorting. So in this occasion, what do I wait for? I wait for confirmation that this high is protected. So either a bearish SMT or it actually gets swept, and that's it. So what do we see? I wait for price to give me this bearish SMT. So what does price do here? We look at this right here at 955, 954 actually, we end up sweeping that 930 high. Okay, right there, boom. Okay, now what do we have? You look at the 15-minute time frame, we have this bearish SMT. So essentially, we have a sweep of this high to go and sweep this low, which is 930 devil's mark low. So at this point, I was like, damn, I kind of want to short this, but I wasn't sure yet. There was a 30-second here. It looks so clean. I was like, bro, I want to short this so bad. I was like, I really want to short this. I hesitated. I'm not going to sit here and lie to you guys. I hesitated on this short. The reason I hesitated was because I was like, I want more confirmation. I'd rather see this entire range get invalidated. And then obviously, if you shorted this, you would go break even here. Right? For me, I just wanted to wait a little bit more because I wanted this entire range to get invalidated to then go short. That's what I wanted to see. Again, usually I would just short. I wanted to see more confirmation. So that could have been the first or the second shorting opportunity. What do? Again, we inverse. But now I want you guys to see the 5-minute structure as well. Not only do we have this bearish SMT, which is enough, I want you guys to notice this 5-minute structure. See, we have a sweep of the high. If you look at this, we sweep this high and close back in the range, sweeping this internal, closing back in the range, meaning this low is most likely going to get taken now. Applying this with structure, why is this a good sweep of the high to close back in? Because it holds context, because this sweep of this internal high also has a bearish SMT inside of a key level, being this 15-minute bearish for valid gap. So when you look at this, you're like, okay, this holds a lot of context because this high is delivering off a gap. We just created a bearish SMT at a key time. 945 is opening high, creating a bearish SMT. We have 5-minute sweep of internal structure, and we're delivering off of this 1-minute bearish for valid gap, which again is also in a premium of our dealing range. Again, we also have this change of state of delivery. So this is my continuation. So I ended up shorting here, stop at the body here, and then I held to the new week opening gap. Now, most people here think this is your break even. This is not your break even. Why is this not your break even? Because this low, with being 930, is your overall draw liquidity. You got to look at the overall draw. This is remember the 15-minute sweep, meaning we should go here, and this is a strong liquidity pool. This is a strong time base. This is mechanically very, very algorithmic. This is super, again, when you see a wick like this, price is most likely going to go and mitigate that wick, especially if it's at a key time. Key time being 9:30 and every 4-hour candles, as well as midnight opening price. That's how I like to see it. Again, this was super A+, so I did not go break even here. And I was like, with the way this choppy market, I will most likely get break even if I go break even. And what does price do after tap? Boom, I would have gone break even, which is a terrible place to go break even because for one, you don't trust your draw liquidity, and for two, again, it doesn't logically make any sense. Okay, we still have all these PDRAs that are protecting your stop loss. We have time, we have this inversion, we have this breaker, we have this order block, and this breakaway gap right over here. Okay, price goes, I go break even. Once we actually mitigate the time, I go break even. And then as you can see, price actually delivers to full TP. Okay, so that is how you could have caught the trade there. And you can see everything aligns beautifully. So with that being said, hope you guys enjoyed this trade recap. And yeah, I'm going to be implementing this a lot more into my trading. And this is how I ended up shorting to the weekly unfilled Imbalance. So hope you guys enjoyed this video, and as always, I'll catch you guys in the next one. Peace.